Pricing carbon dioxide, in theory, should be the most efficient path to cutting our dependence on greenhouse gases. Yet market mechanisms are in disarray after the collapse in global prices. Why then, in Asia, or is Asia pursuing carbon trading schemes that are failing elsewhere? Hello, I'm Steve Lai, and welcome to Between the Lines. Now, whether you believe the rhetoric of climate change or not, politicians from the US President to the Indian Prime Minister and even the head of the Catholic Church have this week put the subject firmly on their agendas for this year. They, along with many leaders, are crunching the numbers to come up with targets to reduce carbon emissions beyond 2020 and the schemes for doing so. It'll culminate in a UN conference in Paris at the end of the year, and that'll seek a binding universal agreement for the first time in 20 years of negotiations. The urgency is no less in Asia than it is in the US or Europe. This week, South Korea launched a stock exchange-based emissions trading scheme, and China is working towards one for 2016. They aim to put a price on a ton of polluting greenhouse gas, such as carbon dioxide, and to be a market for factory and power plant owners to buy and sell the rights to pollute. Over time, the cap on total emissions is reduced, forcing companies and industries to adapt to a lower carbon world. Korea is the first in this region and second in size to that of the European Union. Could it be a precursor for more carbon trading schemes in Asia, and is it the right model in the first place? Now, Korea's emissions trading system, or ETS, comes at a time of near crisis for the European system, where the price of carbon has collapsed such that there is little incentive to cut emissions. Elsewhere, Australia has walked away from its plans for an ETS, and schemes in the US have expanded little beyond California. Still, the world's biggest polluter, China, intends to embark on a nationwide scheme, and now Korea has its own. Let's discuss where we are in the carbon market, and joining me is Kwangyul Peck, president of the Climate Finance Institute and professor of environmental finance and economics at Yonsei University in South Korea. He joins us tonight from Manila. Also, Valerie Karplus, assistant professor at the MIT Sloan School of Management in Boston. Valerie is also director of the Tsinghua MIT China Energy and Climate Project, a joint program on global climate change. And here in studio is Jacquelin. She is an energy analyst at the Energy Studies Institute at the National University of Singapore. Thank you so much for joining me, all of you. Kwangyul, perhaps we can start with you. You're based in Manila, but you are you're in Manila at the moment, but more often based in Korea, where this latest announcement has been made. What's your reaction to it, and can you tell us more about it?
Well, there is neither dispute nor question vis-a-vis the climate change in South Korea, because of the fact that the land temperature has gone up by 1.9 degrees in the last 50 years, and the ocean temperature has gone up by somewhere between 3 and 4 degrees, such that the fish that we catch off our sea are completely different from the fish species that we had 20, 30 years ago. Cold water fish, the herrings are gone, we catch of tropical fish, and in fact, the city of Seoul, where I grew up, 20, 30 years ago, every vacant lot in the city was outdoor ice rink, and now there's not one left. I mean, winter vacation starts in December. You know, the families go to ice rinks, the children go to ice rinks, and teenagers go to ice rinks. And in fact, South Korea routinely comes in top 5 in the Winter Olympic Games, but last one in Sochi became something like 10th. So the climate change is having an impact upon our athletes as well. And in terms of the parliamentary vote that passed the legislation on ETS, which took place in May 2nd, 2012, the vote, there were 151 members of parliament at the parliament, and the vote result was that 148 yes, 3 absentee votes. There was not a single vote of no against the emission trading. So we are in for it.
It sounds like a very committed response from Korea. Valerie, what are you reading into this?
I think it's a tremendous step forward, particularly in Asia. Seeing the rise of carbon trading in Asia is very encouraging, both for the region as well as for the world. I think it's not correct to say that emissions trading hasn't worked other places. In fact, it's, I think, been quite successful. Lower carbon prices actually mean that the cap is doing its job, and it may just be need to be tightened if you want to see a higher carbon price. So the question is, I think South Korea has really taken the experiences from the world, has listened to both practitioners and academics on the issue of will this work, how will this work, and made a very solid decision to move forward with the system.
It's made a very solid decision, you say, but the details are still sort of far from clear. Jacquelin, have you been following this as well? What do you think about it wants to put in place this system, but in the same token, the first 2 years, in fact, the companies don't have to submit anything?
In my opinion, I think this is a major point about this ETS in Korea. It would be the competitiveness, lots of competitive advantage, especially for export-oriented economy like South Korea. So I think the fact that for the first 2 years they don't have you don't have to pay for this credits would be actually the government's way of trying to ease the way for businesses and gain the corporate. Gain
so to get buy-in, perhaps, from the companies.
Get the buy-in from the company. So I think it's the fact that Korea can move forward with the ETS. It would be is a very significant portrayal of political will on the part of South Korea to actually move forward and actively tackle emissions. So I think it's a very good political effort on the part of South Korea.
Well, we can all agree that it's for a good cause, perhaps. But Kwangyul, just to bring you back into the conversation, industries in Korea are not necessarily reacting in favor to this, though, are they?
No, far from it. There are 525 firms that are under the program, and of the 525, no less than 250 have filed quasi lawsuits with the government already, using their own not allocating enough. Not for 2 years, but for 3 years, phase 1, from 2015 to 2017, supposedly 100% of emissions will be issued by the government. However, the firms expand all the time. So this emission reduction target was based upon the last 3 years of emission, which is not necessarily the future emission. So the firms are far from in favor with they're filing lawsuits, and but as we've seen in the EU ETS, firms have the tendency to exaggerate their need. So we will see in 2017, the end of the first phase, whether the firms have misled the government or not. But the carbon credits are being traded around at $9–10, which is a target price that set by the government. But the volume is very low, and the last 3–4 days there was no trading whatsoever. So everybody's sitting back and waiting for the real numbers to come out. But the problem is more structural than what is being seen from the outside. Because of the fact that this is relatively new, our ETS does not have a regulatory body, and we don't even know, our legislation does not define what carbon is. From academic perspective, it's a currency. It behaves like a currency. It's made by the government to meet a specific target. It's worthless by itself. But often the carbons are traded as financial securities because it's traded forward and futures contract. And lastly, in terms of accounting, it's seen as commodity, but we don't define what it is. So when there's a legal dispute, and as is happening right now, we are not sure as to which agency will supervise or handle the dispute. And these are just some of the problems that we are witnessing. The endeavor or the attempt was great, but the actual mechanics and procedures and methodologies, all of these are quite lacking.
Well, that seems like quite a serious concern, you'd have to think, without a clear definition or a regulatory body. Valerie, what are your thoughts on this? Because the targets are for it to sort of 30% by 2020. That's the government's target to reduce the country's normal volume of greenhouse gas. How realistic is that, given that there is no regulatory framework to put it in place?
I think we need to look at this as a process, potentially long-term process, as has been the case in other ETSs. Getting an ETS started takes some amount of experimentation, amount of institution building. You're seeing that in mainland China now. You're seeing that, or you saw that in the first phase of the EU ETS, and even the groundwork that was laid prior to the initial kickoff. And so I think we shouldn't be too quick to judge the frameworks that we see in place now. Trading volumes may be low for the first several months. That doesn't mean the system isn't going to work. The fact that there are 3-year commitment periods means that we may need to wait a while to see sort of how binding this initial cap is. Of course, I think industry has had expectations about the reductions that were targeted for a while. This just formalizes that and starts to push. I think once you have the system in place, you can push ever harder as you start to get towards that 2020 deadline. I think it's an important signal to have, though, and a goal that will be hard to back away from.
I just want to read you guys a quote here from Korea Exchange Chairman and CEO Choi Kwang-soo. He says, "We won't focus on the short-term achievements of this market, but gather wisdom and support to develop this market in the long term." Jacquelin, is that the only way forward? I mean, nothing can be... It seems like everyone seems to want to wait and see, yet seems to have sort of an idea of which direction they want to head in.
I'm sorry, can you rephrase the question?
Yeah, so I'm just wondering, like, everyone seems to be taking this sort of wait-and-see approach, but the direction is clear, though, isn't it?
Yes, the direction is definitely clear, but the reason why why various stakeholders are taking on a wait-and-see approach is that the market design of the South Korean ETS is mainly based on EU ETS, but there's a lot of new innovations and mechanisms introduced so that it's improved upon the EU ETS. So how it would work in the South Korean context it's very uncertain. We don't really know what is going to happen. That's why there's a lot of uncertainty involved, and people don't really seem to know where they are heading. But the long-term future is definitely the long-term policy incentives. The long-term policy is very clear for South Korea. It has a very stringent emissions, a national abatement target of 30%. Below BAU, and they have even modified the calculation of the BAU from a higher around 800 MT of CO2e to around 770. So there's a strong political commitment to actually ensure that South Korea reaches its abatement target. So the long-term policy is definitely very clear. It's just how we're going to move forward to achieve this target.
Now, political will is important. It's something that the EU has in the past, but we'll discover after the break that it hasn't quite gone to plan. After this, after this short break, we'll talk about lessons from the EU's troubled carbon trading scheme, and we'll talk about Asia as well and its other initiatives back in a moment. Welcome back. We're discussing climate change policy and appropriate models for cutting greenhouse gases. Let's turn our attention back to the European Union now, which runs the world's biggest carbon trading scheme. And joining me in the studio is Jacquelin from the Energy Studies Institute of the National University of Singapore. Also, Kwangyul Peck, president of the Climate Finance Institute at Yonsei University, and Valerie Karplus, a China energy specialist from MIT Sloan School of Management. Valerie, I'd like to come to you first and get your thoughts on lessons that can be learned from the European Union's approach.
Great, thank you. Yes, I think there are a lot of lessons, and the world has looked very closely at what Europe has achieved in building an ETS. I think one of the things that you saw with the ETS is that early on, just establishing a carbon price is a very strong signal to industry, and even more so than the precise level of the carbon price, that sort of psychological signal to industry has really proved quite powerful in inducing some additional reduction, momentum, and so I think that's actually something that we've learned from Europe. The other another important lesson from Europe has been in emissions trading. I think is really the fact that broader coverage is important, and coordination with other policy instruments is extremely important. So, to the extent that that you could expand coverage of the emissions trading system to, not 20%, 40%, even 60% or higher of all sources of GHG emissions will make a huge difference to curbing what's called leakage, or the tendency of emissions to move outside of regulated borders as industries relocate or what have you. And this can be an issue at the global scale as well. And so I think in South Korea's case it will be critical to, and I know this is already happening, thinking ahead about how to potentially partner, strategically link with other emerging emissions trading systems in the region, both for more flexibility in taking reductions, but also in terms of just broadening the coverage area and preventing the likelihood of leakage. Finally, I'll just mention that in the EU ETS case, I think as moving forward, it has the EU ETS has moved more toward an auction-based rather than a free allocation-based system, and I believe this is also the intention in Korea's case as well. The ETS in Europe, I think, has and will benefit from the ability to use carbon pricing as a way to raise revenues, to make permits more dear to those who hold them, rather than having an initial allocation for free at the beginning. And that's something, again, I think that will initially free allocations may be appropriate. Over time, this could actually be an important source of revenue for reinvesting in clean energy technology and other priorities.
Valerie, I just want to get Kwangyul's response to this. Compatibility between these different sort of markets perhaps is going to be a question as well. Do you think countries such as China that are also looking to establish their own sort of system, are you seeing sort of synergies or lessons learned between all these countries?
No, first of all, I don't think these carbons will be fungible, as they say. It's a completely different product. But more than anything else, let's clarify one thing here. ETS is not designed to reduce emission. ETS is designed to reduce the cost of emission reduction. So it doesn't have anything to do with the emission reduction per se, but the logical paradigm governing ETS goes like this. It costs company A $1 to reduce 1 ton, company B $10 to reduce 1 ton, company C $100 to reduce 1 ton. So if the government says through the executive order, everybody reduce by 1 ton so that we have 3 tons reduction, then the cost would be 1 plus 10 plus 100, that's $111. But should we introduce ETS and let the companies to trade with each other, then logically, seemingly, B and C will go to company A and buy carbon at $1, so that the combined social cost would be $3. But is that going to work in the real world? We don't think so. It didn't work in the EU, and it's not going to work in Korea. The Korean market is flooded with the global players, you name Samsung and Hyundai, these guys. They are not going to play Santa Claus and give away carbon at their cost. When the other side, cost is $10 or $100, and they are in it to make money, the cost will go up. And the Union Bank of Switzerland has released a study a couple of years ago, and it argues that there's unnecessary profit that went to the ETS players in Europe was to the tune of $288 billion. All these free carbons that they get from the government, they sell it, and the actual cost they give it to the transfer to the consumers. And there's a very good chance that it's going to happen in Korea again. And we also have calculated already that government target is off by 100 million tons. They say it's 776 million tons in 2020. No, we think it's going to be more like 850 million tons. And so the government, in its political ambition to do right things at a reasonable cost, are making some deadly mistakes. And no, we do not have a long-term plan. Our plan is the phase 1, 2015 to 2017, 100% free carbon. 2018 to 2020, 97% free carbon. But we don't know what the demand will be. And when the real thing starts in 2021, the phase 3, 2021 to 2025, all we know at this point is that it will be somewhere along the line of 90% that's free, and the 10% they will have to pay for it. And the offset carbon mechanism, that's what the government gives you as an allowance, and what you do at your own factory is offset. It's capped at 10%. That none of these things, all these things are very well intentioned. If they are going to be executed as the government wishes, we have a great deal of doubts about that.
Jacquelin, would you go along with what Kwangyul's saying there, that the intentions may be good, but the ability to execute them is going to be a big challenge?
Definitely, we're seeing this from the experiences from the region of international EU ETS experience. There's been when the EU ETS took off, when initially it started, there was a lot of enthusiasm on the part of how the EU ETS mechanism is going to contribute to both emissions reduction and also achieving it at a low cost. But what we're seeing now is how the market design has failed the EU ETS, and we're not able to achieve most of our most well-intended intentions. So I do see a lot of potential problems, but I think we have to be cautiously optimistic about the future of emissions trading schemes around the world, because there is a potential for us to learn from these experiences and create a better system so that the system would actually work. But definitely what we are seeing now is there's a lot of inefficiency within the market, so we're not able to capitalize on even the most efficient market designs. But I don't think we should just dismiss that the emissions trading scheme would not work in the future.
With the United Nations Climate Change Conference being held in Paris in November this year, it's certainly going to be a topic that is going to be sort of thrashed out along the way. Kwangyul, what's your thoughts building up to that conference? Do you think more countries are going to be announcing their own schemes, or fleshing out perhaps potential problems?
Yes, I think actually we are going the right direction in Paris of 2015 because of the fact that up to 2014 it was by and large European agenda, which was to have a global body, the central entity, to dictate the terms and conditions of emission reduction. But Americans have argued against that, and what they call portfolio of agreements, in which every nation, every society does things in its own way, in a manner that's compatible to that entity. That probably is the only way, because we've seen this with the WTO, we've seen this with the GAP. When they try to go global, it just doesn't work. If this GAP and WTO didn't work with the real physical product, then this carbon emission, which is very abstract, it's not going to work on a global basis. There's not going to be global pricing. It'll be more or less localized. It'll be decentralized. It'll be regionalized. So in other words, WTO and GAP becoming North American NAFTA, EU, the bilateral agreements. So I think we're going to be seeing the same thing in carbon world, and the Paris 2015 will be the beginning of this new paradigm.
Okay, Valerie, I just want to get your thoughts on that. Are you optimistic about it?
About emissions trading or the upcoming IPCC?
Well, about how they both sort of play together, or will be sort of working sort of together going forward this year.
Okay, great. Yeah, I couldn't hear the previous answer very well, but let me just say, yes, I'm optimistic about both, and for this reason. I think in this round you're really seeing countries become more disciplined and sober about thinking through what commitments they can actually sign up to, given economic realities. It's an approach that is much more, starts from the realities that face a particular country and move towards bringing those commitments together at the forum in December. I think as countries set up emissions trading systems and figure out ways to make them work better, I agree that there are a lot of challenges at the beginning, getting the institutions right, but it's worthwhile, and I think we will see more the Paris meeting as well as future meetings being a place to bring commitments together, to formalize them, and hopefully constructively link emissions trading systems, think through best practices for policy, and get smarter about reducing carbon.
And thank you very much for your thoughts, and to all of you. That's it for this show. I'd like to thank my guests, Jacquelin from the National University of Singapore, Kwangyul Peck, President of the Climate Finance Institute at Yonsei University, and Valerie Karplus from the MIT Sloan School of Management. Now, coming up on Thursday is Between the Lines. Barack Obama rode the U.S. economic wave in his State of the Union address this week. Will the ripple effect be felt here in Asia? That's Thursday on Between the Lines. A reminder, the show is available online at channelnewsasia.com/video. Goodbye for now.